You're still watching the conversation on Lagos television. This morning, like Abimbola did say before that break, we'll be looking at Nigeria's economy and, of course, the consecutive expansion that we have witnessed since January 2026. The economy has shown sustainable growth with various economic activities expanding for 14 consecutive months as at January 2026. And this growth, of course, is driven by strong performance in different sectors, with industrial, services, and agricultural sectors taking the lead vis-a-vis the CBN's Purchasing Managers Index PMI standing at 55.7 point. This, of course, is good news for the economy and is beginning to show us that some of the reforms of the federal government are beginning to yield results. We don't know so much about the figures, but we have somebody in the studio this morning. When it comes to economy, he knows the economy inside out. We have with us in the studio Muktar Mohammed, CEO Finance with Muktar, and is also a financial management consultant. It's our pleasure to have you.
Thank you, Jibola. Happy
and
New
compliment
Year.
of the season.
I'm seeing you for the first time.
I'm seeing you for the first time too. Anyways, Nigeria's economy and consecutive expansion, like I did say in my intro, we have witnessed expansion for 14 consecutive months. But then, what are those economic indices that are responsible for this 14 months consecutive expansion of the Nigerian economy?
First, you saw the rebase. The rebasing of the economy brought in new sectors, the fintech, the mining sector, more also the service sectors. So you've seen that expansion is driven by those sectors, then largely driven by oil output have improved. Oil price also have improved slightly. Also the main driver of the Nigerian economy, the exchange rates, have stabilized. In terms of, when you say stabilized, not really, but you are now saying that we can't go beyond 1,400, 1,450. Yeah, sometimes we even do 1,378, and projecting that at the end of the year we might get to 1,300. Then inflation has come down. Food inflation month to month is coming down before we see year to year because of the rebasing. So now we are beginning to see month to month come down. So those are the major drivers that you've seen, especially I think exchange rate stability is the key that have driven down inflation, that has also, you see those expansion due to rebasing.
Okay, so from what you've explained so far, a lot of Nigerians will still say, how real is this growth that you've talked about, even though you've mentioned those sectors that have actually been largely responsible for this expansion drive. But when you look at it and you drive down to the average Nigerian, would you say, how would you now categorize, the realness or the breaking it down? Because again, yes, there's things on paper, they look so good, but an average Nigerian will say, but you will say things are coming down. How come it still has not shown averagely? So when you look at it beyond the statistics, how real is this growth?
I think you go to the market, so you should know how very
yes, I do.
Because
but
before
again,
now, you go to the market in the morning, it's 5 naira. You go in the afternoon,
it's 10 naira.
It's 10 naira. But now you go to the market last month, it's 5 naira. You go this month, it could still be 5 naira.
Or maybe 7 naira.
No, I don't think it's even, it should still be 5 naira. From all the statistics that we've seen, those hyper pricing that we used to see before now has come down drastically. And this is due to the exchange rate. Now, a lot of Nigerians, I think the challenge we have is that we want it to come back
to what it was right.
So that's going to take a lot for that to happen, because again, globally, you've seen a shift in the economy.
Right.
You've seen inflation has gone up everywhere in the world. So definitely we are not an isolation of that. But our own was peculiar because of the volatility we saw in terms of exchange rate. Most of what we consume, we import. So all that was responsible for the kind of hyper pricing that we saw. But at least now, at least for the first time in December, we saw rice coming to like 50 naira.
50,000.
50,000
to a bag.
To a bag, 50 to averaging 60,000 a bag. Then also for the first time in Nigeria in December, We saw fuel price come down to about 739 naira, averaging 800 naira. It has not happened before. Normally, December we queue in and waiting. So those are a pointer to what we think. Yes. Now, in terms of coming to the household now, the challenge is that the earning ability of the household have not improved, even if the price has come down.
Yeah.
Minimum wage is still 70,000. Exchange rate has made minimum wage become less than what it was even before President Tinubu came to power. So you see those challenges are there. But as we continue to deal in bringing down inflation, stabilizing exchange rate, then you see most of the household begin to see an improvement.
Okay.
Like Jibola said about the CBN Consumer Price Index has improved. We're a consuming economy. You can also see that with companies. I think companies are now not suffering the kind of losses they used to suffer before now.
Yeah.
You can see it stabilize and they are also doing profit, especially the industrial goods that you say, the manufacturing. You could see a little bit of stability year and year.
Okay.
But again, if you look at most of this stability, they are largely driven by monetary policy.
Okay.
So now, for us, for the average household to see the impact, then the physical side need to do something. And when you talk about the physical, you're talking about the federal government, the state government, and the local government.
Right.
Now, you could point to this federal government that you could see, I'll tell you, we are doing infrastructure, we are building Coastal Road, we are looking at Onisha Aba Road, we are looking at Port Harcourt Road, we are looking at Abuja to Kano Road. You could see them, you say, oh, we are trying to expand infrastructure in terms of telecommunication, fiber, optical lane. You could see all that with the federal government. But can you categorically say that of the state government and local government? Because what we've seen is that improvement in terms of revenue have come to these two state
and local government.
To state and local government, but it's not commensurate with the life of the average Nigeria, which mostly should be felt through the local government and the state government. So that is why the average Nigerian will tell you that we are not seeing anything because their life are still the same. Talk about
living standard
have not changed, rather have deteriorated.
Right.
Because the local government or the state government are even now charging you some exorbitant fee that you were not paying before, especially the informal sector, which is the key driver of the Nigerian economy. So that is why until there's that synergy between the local government, the federal government,
and the state
government, then the average Nigerian begin to say, okay, we could see light at the end of the tunnel.
Okay, let's talk about figures now, because Abimbola put a very critical question to you earlier. I did say earlier that the PMI is standing at 55.7, and of course, when you look at the breakdown of the points, the industrial sector is taking the lead at 56.0 points, services sector at 54.5, and agricultural sector at 54.2. My question is this: does this consecutive growth translate to increase in production, better condition of doing business, and more demand for goods?
Okay, let's look at it. More demand for goods, one, is part of it because, again, those prices are not hyper, like I said. So Jibola used to buy 1 tin of meat because it was 1,500. Now it's about 1,000. He could buy 1.5 tin of meat. So that has improved in terms of consumption, production. So production will definitely go up because demand is a little bit more.
It's increasing,
Has increased. That is one. Then the second one you talk about.
That's increase in production. Okay, you have addressed that. Better condition of doing business.
Well, better condition of doing business, neither here nor there, depending on the sector that you are. If you are a sector that's into maybe service sector, maybe telecom sector, you can see the condition is not that so fantastic because your network these days you make your calls and they are not as they used to be. If you are in the key service sector of government, you could say there's an improvement because these days you don't have to go to the passport office and see those large crowd that you used to see before. So you could say, okay, there's an improvement. Then if you look at the farmers, have they been able to go to farm like they used to go before? They may not have been able to go to like they used to go, but there seems to be a little gradual improvement before we started seeing those uphill some days ago. So
that is what's responsible for these points.
Those points. Then the other one, the first one you mentioned, it has to do with, so you gave 3 points there.
Yes.
Agriculture? Is that agriculture?
Agriculture is at 54. Industrial sector at 56.0 points.
So that's the industrial sector. And if you see, I've tried to address agriculture too, because agriculture has improved. You know, the fact that we're seeing farmers are able to go to farm. Security has improved in some states, especially in those food basket states of Nigeria. There's not so much just headerman, farmer crisis. They have been addressed. Terrorism, yes, it's still there, but some farmers can go to farm in Brunei, in Maiduguri, in Yobe, and so those are responsible. Then again, production also have improved because of some physical policy of the government that are trying to drive people to go back to agriculture. We may not have seen it the way we want to see it, but definitely there are subtle moves here and there to improve agricultural production, and we can see that.
All right, riding on Ajibola's last question, so I'll say that the consecutive expansion, is it influencing business confidence and some kind of investments decision? Is that
yes,
is that happening?
Business confidence has improved, definitely. Investment, of course, investment has really improved. Because once you have a stable exchange rate, people are able to plan for business. So business can say, okay, I know that the exchange rate is 1,400. I'm going. If I sell my product, I'm still sure I'm going to get that exchange rate at 1,400.
Right.
So that's an improvement. In the investment, yes, investment now. There's a two-way exchange system.
Yeah.
If you're a foreign investor, you're a portfolio investor, you're a foreign direct investor, you can come into Nigeria, you want to exit, you can easily exit because there is supply of liquidity, FX.
Yeah.
The FX is there. Your FX you bring in, you can exit. Then it has created, like I said, because of the rebasing again, you see investment in key sector like mining, despite the insecurity in those areas. You could see the fintech companies also coming in.
Right.
And you could see also, because of the recapitalization of the banking sector, again, that's going to happen. You can see inflow of liquidity. That tells you that there's investment confidence.
Okay, so the FDI should be able to increase.
It has improved, increased, because if you look at our foreign reserve, the CBN is saying we are almost hitting 2 years all-time high.
Right.
Even if before now we're seeing those reserves were driven by Eurobond, but we are not issuing any Eurobond. We are seeing that high. So that means there's a lot of inflow.
Inflow coming in, all right.
Okay, Muktar, 14 months consecutive expansion is good. And, you know, you broke it down earlier, sector by sector, as to why we are at this particular point in time. But then, what would you suggest for us to do in terms of measures, clinical measures, for us to sustain this momentum? Because it is one thing to be consistent, it's another thing for you to sustain the momentum.
Jibola is fragile. Whatever momentum we're enjoying is very fragile. The truth is that any momentum you enjoy without addressing food security and employment, it's not going to be. It can't last for a long time. So definitely yes, with these measures now, when you see food security have come in, then you see stability. Then what next you begin to see? You begin to see how job will be created. Because you're talking about, like we've talked about, those expansion in the industrial sector now. We expect them to expand to other sides, other parts of the country, because consumer index has improved. So with that expansion, then you begin to get more Nigerians wanting to buy most of these products. So they need to expand. That will create jobs. So as long as this expansion we are seeing will not lead to food security and job creation, definitely we'll be able to sustain it. But has it really led to that? Now, if you look at, let's talk about the industrial goods. You realize that there's a lot of construction activities going around the country, almost every part of the country. So it's beginning to provide jobs for those people along that axis of those construction. Smaller business are boosting in those areas. And you know that those informal sector are the key drivers. So we are getting a lot of people going into one business or the other. I talked about the fintech companies. You can see people now beginning to do their fintech. You look mobile money transfer, this and that app coming in, and a lot of young Nigerians are beginning to use that to create jobs. Even if that you're creating a job, but again, the government is giving you the enabling environment to create that jobs. So until we get to that point whereby then you have food on your table, insecurity have been brought down to the barest minimum, farmers can go to farm. That will also attract a lot of young generation, because now you see the younger generation, what you call them, the Gen Alpha, the Gen Zs, they are not really into farming yet. They are just into the fintech, taking over to make quick money. So, but by the time you begin to make that environment conducive and they begin to see long-term value chain, then they also go into agriculture. So that's when you will now begin to say, okay, my reform has brought food on the table of every Nigeria. My reform has begun to create jobs. Until we get to that point, no matter what we achieve, it's conservative.
So that would be the solution to the problem that Abimbola raised earlier.
Exactly.
About the people feeling the impact of some of this momentum.
The people need to feel the impact, but before they want to feel the impact on food on their table, job for their loved ones.
Right. So one of the papers, I think it's the Vanguard newspaper this morning, has one of the headlines saying, let me quickly flip to that, then I can take my question on that. So I think it's credited to the Senate saying that Nigeria will continue borrowing to fund 25.91 trillion budget deficit. That's coming from the Senate. But my question this morning is, would we then say that Nigeria will continue to borrow her way into growth? Or are we seeing productivity-led expansion since we're talking about the consecutive expansion?
You know, the challenge we have in terms of government, this present administration, we seem to have conflicting figures.
Right.
And that
is a problem on its own. Okay.
You hear the finance minister said, we are not going to borrow this year like we borrowed last year.
Right.
You see the Senate will come in and say, look, there's no how we'll borrow. You look, the budget deficit is about 26 trillion.
Yeah.
And then you look at
even the figures that come from the budget office is also very different.
Then you look at the Federation account. The Accountant General said last year inflow was about 35 trillion.
Yeah.
Then you look at it and you said there's no synergy.
Right.
There seems to be
everybody
seems to be banishing figures.
Right. Isn't that also detrimental?
It's very detrimental
on the part of the government. So government needs to also nip that in the bud.
Tell us, look, borrowing is the largest economy in the world are China and America, the American economy. Let's talk about the American economy. American economies thrive most on borrowing.
Right.
Whether federal or citizen borrowing. But that leads to expansion. So borrowing in itself is not a problem.
Okay.
But what are you borrowing for? Are you borrowing for expansion or consumption?
Okay.
So that's where the challenge is for Nigerians. So for me, I think whether we borrowing for me, I've said it over and over, it's not a problem. It's not a problem.
Why are you borrowing for?
Are you borrowing for the productive sector or are you borrowing for recurrent expenditure?
Okay.
And in your borrowing, will it create jobs or will it create job or is just consumption?
Yeah.
So we need, or then again, are you borrowing that what you borrow? Let me give an example. I wish government saying we are not putting our resources in the coastal route. We made an open bidding for the Lagos Calabar coastal route. Government say we make an open bidding, you build, you operate for the next 30 years, and then you transfer to us. And in that transfer, we don't do what we do, whereby when it's getting to that time, you now see that there's extension of that transfer by another 10 years because they did not train the people. You put all those training mechanisms
from the beginning.
Okay. Then that means government will have more money.
Because you're not borrowing to build.
So you are doing the PPP, which is globally the best practice.
Right.
So you are not doing that PPP. So the road is on private sector driven. They tow the road. They collect their money for the next 25 years. You government, you don't spend it. So what happened? Government will now have more money to invest in agriculture and healthcare. But what you see is government want to be part of all the projects.
Right.
And you don't have that resources. Globally, government everywhere don't have that resources.
Yeah.
So PPP is the way. Look at what we experienced in Lagos. Apapa to 7up. It was a private partnership building. And we see how solid that road is today. And we're saying that road will take us for a long time. Government did not even have to spend money. I wish that also extend to Lagos Ibadan. That was supposed to be the initial projection of that road, but it failed because of they didn't give. It failed because of costing and everything. The federal government has to take it upon. We are seeing that I think Onitsha, around Onitsha is where MTN is handling that. You will see. So those are what government is supposed to do. So if government is not doing that, we'll continue to suffer this borrowing cost, high borrowing that.
And we're paying back even the interest.
With huge interest. But unfortunately, again, it's not the generation that borrow that normally pay.
Yeah, true.
So that's the challenge again.
And you pay it forward.
Okay, with some of the figures that we have laid on the table this morning, how realistic is this ambitious $1 trillion economy of the federal government vis-a-vis the 15% targets of inflation of this government?
Well, if you look at, let me address inflation. Government said inflation, I mean, they've been very conservative. I mean, this is the first time I saw they were very conservative. Remember when the president said they're targeting inflation to be 15%? At that time, we're doing about 14.5% inflation. And even going into this first quarter, I mean, January inflation figure, you see that it was lower to about 14 point something percent. But yet government is saying, look, we hope inflation to be 15%, which I think is achievable. And it may be less. That tells you that the government is being very conservative, which I think is fine. Now, why are we seeing that 15%? Remember, we are going to an election year, Jibola. An election year is a year whereby liquidities are flow in the Nigerian economy. Some people think when you say liquidities are flow in the Nigerian economy in an election year, we don't mean liquidity in the terms of giving of money to persuade voters. No, I think we always get it wrong when it comes to that. When we say there will be enough liquidity during an election year, we are saying that the informal sector, the woman that is selling food, will begin to benefit because there will be a boost campaign. The printer will begin to make money. The informal sector really strive during an election. So, and this sector is largely driven by liquidity. So you have so much liquidity. So that will slow down the kind of inflation. That will heighten inflationary pressure. That's why I think government is putting that inflationary figure at 15%, which I think is good. And the other one you're saying,
the $1 trillion economy.
Look, a $1 trillion economy is achievable depending on what you want to achieve. Now, you might not be able to achieve it at a whole.
Okay.
You have to build it sector by sector. Now, you see, for you to achieve a $1 trillion economy, your financial sector needs to be the key driver of that
economy.
If your financial sector is not stable, nobody wants to come and invest in your economy. So what has government done? They've said, bank, you must recapitalize. Even if the bank have so much that is better for them to even keep. But this government is saying, no, we need you to attract fresh funds. So that when we're building this $1 trillion economy, that means opening up new sector, bringing in new investors. Then foreigners will not be the one to benefit. Our banks will be able to do these high ticketing deals. That is what it entails. So that is where we should start from. You see the insurance sector also, recapitalization. So you build those sectors. Then you go to the service sector. Now, remember that once your bank is fully capitalized, they will be able to improve infrastructure because the service sector will need to come and say, okay, we need to borrow. And then you are now beginning to see that your rate, your economy, so you are cutting rate. They need to borrow to build better, modern infrastructure. And they come, then you are able to fund that borrowing to build this infrastructure. So it's a gradual burst from one sector to another. So by the time you get to those places, then the people begin to feel the impact. Because what you see now, you see job creation, you see innovation. Then the $1 trillion economy will not be a paper economy. Because you can have a $1 trillion economy that is paper driven, but you need to have a $1 trillion economy that is people driven, whereby the people are feeling the impact of a $1 trillion economy. That's why every Nigerian say, they say economic expansion, they say this is happening,
can't see it,
but we can't see it because it's all on paper until they begin to feel it in their life. So a $1 trillion economy, fantastic, good ambition, but let it be people driven.
Okay. All right. I mean, in Jibola's intro, he went back to actually say that, of course, according to the CBN, month of January, Nigeria, of course, was in a 14th consecutive month of, this expansion that we're talking about. Is it safe to say that though in a 14th month of expansion, would you say that Nigeria's economy is still very volatile?
No. We are not volatile.
We're not volatile.
We're out of volatility.
Okay.
That's the truth. Even IMF and everybody, we have entered stability.
We are now very stable.
We will not say very stable.
Okay, but at least we are stable.
That's like I talk about hyper.
Okay.
Hyper exchange rates. We don't see that again.
Yeah.
We have now liquidity. I said it one time, I think, on your program when we were talking about the FX. And I said, for us to see, we'll say FX are stabilized, is when Jibola, I think I said it there, can use his Naira card to do transaction in dollars.
True.
And now that is happening.
Yeah.
Every banks are beginning to give you rates. And do you understand, do you see something about those rates? They are different from bank to bank.
True.
Some banks are giving you lower rates, some banks are giving you higher rates.
And it changes daily.
It changes daily.
True.
So we are beginning to see what the CBN was trying to achieve, a competitive exchange rate. Now, you remember CBN, what they started was that they wanted a competitive exchange rate. So that was achieved. Then they now said, okay, now we have the company, but we need to stabilize it. And it seems that stability is coming into stream. So we are no more in that volatility again. Because if you look at those exchange rates between even the parallel market and the official market, the difference is still there. But you can see that a lot of people now rather use their Naira card to do those transactions. So there's not so much pressure on the parallel market.
Exchange, okay.
So,
follow-up to that question will be, now that we are stable, and of course I'm sure that financially and economically there's a stage where we're pushing towards, to the next stage. What are some of those financial risks that Nigeria must avoid to ensure that we are very stable?
Physical rascality. Exactly, physical rascality. Because you can't be stable and you begin to... I always talked about the 3 tiers of government now. I've talked about the federal government, state government, I've talked about the local government. Have we seen fiscal prudence?
On the part of the 3 of them?
Let's even on the part of the 3 of them.
Okay.
Because you still see ministers driving over 4 or 5 cars, having entourage going. We have a particular minister that drive entourage, sometimes they count his car about 12. Who's funding, who's foreign? That's fiscal rascality. So for us to stabilize it, then we need to reduce our cost of governance.
Yeah.
So you can't be, again, already cost of governance in this administration is the highest ever in the history, because the numbers of ministers and directors of whatever board we have created, South and Southwest Commission, Northwest, North Central, Northeast, and Southeast, all these. So for us to be, we must come to a point that we say we need to be physical discipline rather than be physical rascality. For me, that's
okay. This is a part of Abimbola's question. You raised something very vital the other time. This is an election here.
Yeah.
Are there possibilities that Forex will be under pressure?
No, I don't think so. Because again, we will not be seeing...
Because these politicians, they trade in Forex now.
You see, that could also have our advantage because we have enough liquidity in the system.
Okay.
Like you said, the politicians, they have FX in their home. They don't have it in the bank. They have it in their homes. So they will bring it out to exchange for Naira. Okay. Do you get my point? So they'll bring it out. So the flow of FX will be much. But remember that the demand for FX will be less at that time period. Because it's election year is a local driven year. It's not international election that you have to export the money outside the shore of the country. So you see liquidity. So that is why some people are optimistic that we could see the exchange rate coming down, because there will be a lot of inflow of liquidity, especially FX liquidity, into the system. So yes, you could see that happening, but it will be to the advantage, because most of the trading that we do from the informal sector, they will not be trading in dollars. They'll be trading in Naira. Yeah. So definitely, I think that could be an advantage. But again, we have the EFCC and others. They need to up their game.
But when we talk about the economy, a lot of people also think that Nigerians, or were not responsible to the economy, and we always think that this is just about government. And like you've said earlier, the 3 arms of government also have a responsibility here. But the average Nigerian, is there any contribution from our part that also accrues to the growth of the economy?
Yes, number one, we have to hold our leaders responsible. That's our civic responsibility. Okay. We have to ask questions. We really have questions. We don't ask questions. We just keep on blaming. We just think that every politician is a thief. Just allow him to steal. And then when he's gone, we'll know how much he has stolen, and we'll make noise in the newspaper. Okay. That is one. Secondly, we don't even see we don't normally look at the economy and say, well, what's the opportunity for us to grow? We just keep on complaining about it, not looking, okay, the FS market have been liberalized now. That means there is stability. What kind of business can I continue my FS business that I used to do before? Okay. Can I begin to do local production? There's a particular goods that is no more finding its way into Nigeria. Into the country. So all those opportunities are we taking advantage of it as an ordinary Nigerian? But we always just see the blink. Yeah. Just seeing everywhere is blank. We don't see anything. We don't believe in the government. I think for every Nigerian, the mindset has to change to say that this is our economy. We own this economy. We are responsible for this economy, and we need to hold them accountable for this economy.
So in the same vein from what you've said, the SMEs, how do they also come in here? Because that's the driver of the economy. And if the SME, especially if government is also not paying premium attention to that sector, that's also a time bomb waiting to explode.
Exactly. Government need to pay premium attention. Unfortunately, not just government, the monetary side have to pay premium attention. The CBN has to cut rate to make sure have to admit, let's have that rate cut.
The interest rates?
The interest rate, so that cost of borrowing will be low.
Okay.
That's how this SME can strive. They can't be striving at high borrowing. Now you've been able to stabilize their exchange rate for them. What they are saying now is that we want to expand. We want to do more. But in expansion, we don't have the resources to do it all. So we need to borrow. But cost of borrowing must have to come down.
Right.
So it's behind the monetary policy team this year to look at ways that they can bring down the cost of borrowing. Borrowing at an interest rate of 27%
is high.
They're in Art Lift Center, and then you see it hit 34%. Which business will survive under 34% borrowing costs? So you always see our SME just being in that little space, instead of expanding to create jobs. And like you said, those are the drivers of the Nigerian economy. So the physical side has to come up with policy that will enhance growth of the economy. Tax policy is good. That's what the physical side have done now. Those smaller SMEs are not going to have so much tax burden. They can now begin to, just all you need is to file. If you don't do a return up to 200, about 100 million, depending on which of the tax law you are looking at now. There's the one for the 50 million, there's the one for the 100 million. So, depending on which one you are looking at, or which one the tax man decide to use on you. So that has also helped the smaller businesses to grow. So now they have more money, they are not paying so much on tax, so they can expand. Yeah. But monetarily, they also have to see that the cost of borrowing has come down for them to borrow also to expand. And if they can borrow to expand, they are ready to pay more taxes. So it's a win-win for the government.
Okay, we always have policy, but implementation is always our problem. In ensuring that these SMEs grow, do you think the federal government is driving the Buy Nigeria initiative well enough for them to grow at that space at which you would have wanted to see them?
I think the Buy Nigeria initiative for now is largely driven by contracts. If you go to parastatals, we've not got into that place that is the ownership is on the onus is on me and you to want to buy a Nigerian product. Do you get what I'm trying to say? They want you see the Buy Nigeria product. Even the petroleum sector, we've not even taken it upon ourselves. The government has shifted the goalposts because before now the president said we are going to tax more in terms of importation of refined petroleum products. That would have favored the local refineries. Yeah. But many that they came up saying, no, you know what? This local refinery does not have the capacity to even meet local demands. The local refinery said, no, we have the capacity. Government has shifted that into sometime in April. Hopefully, they'll have the political urge to say, this is what we want. That's when the Buy Nigeria initiative has come, because that's a key sector. Now, again, like I said, when the Buy Nigeria initiative is more or less into the federal government, federal power setup in terms of projects. But we have not seen that in terms of consumption. Where me and Jibola will not be wearing a foreign suit. We're buying a Nigerian suit that was made here in Nigeria. Like what we have seen these days. After we had those hyperinflation, COVID came in, we saw that a lot of our materials were produced here, shoes and everything. You see, those are that we are bought into that, but we need to buy into other areas. It should be a buzz around that. Somebody should so be very proud to say, I'm wearing a made in Nigerian goods. I'm eating a made in Nigerian product. That is when you will buy into it. For now, we are buying into it in terms of contract. If you're a contractor, you have a local contractor, you'll be given a project. So it's a different thing. Let's get it to everybody to buy into it.
Right, as we wrap up this conversation, you mentioned earlier on that one of the things Nigeria must avoid right now is financial recklessness. And so if we must sustain this expansion, which of course has stabilized in the last 14 months, again, what are some of the things that you think governments, are talking about financial decisions now, that government must consolidate on or must prioritize?
Prioritize discipline in terms of infrastructure. Government should not put all their money to build infrastructure. They should think about the PPP. They don't have to be in every project. It will still be to their credit.
Right.
So that will bring down costs.
Is it a Nigerian thing?
I think it's a Nigerian thing. Everybody wants to say, we did it.
Administration did it, yeah. But even with PPP, to still be credited to your administration.
Sometimes they don't see it like that. So because a PPP project sometimes don't outlive you.
Yes.
So that's the major challenge. You can say a PPP project like the Lagos Calabar Coastal Road, we outlived the government that started it. because definitely one government cannot finish that project. So those are part of the things the government should need to look at. Again, then they should also think about investing in education and health. Is key, because if you see, when we're talking about consumer price index have improved, a lot of Nigerians are sending their children to private schools. When you improve the government schools, the public schools, instead of Nigerians paying so much money, every category has its own type of school that they can afford.
Yeah.
There are the one for 25,000, there's the one for 20,000, there's the one for 15,000, there's even the one for 10,000. So you can imagine if government improve their own, and those 10,000, 25,000, 50,000 are going into consumption. That they are building an industry.
Yeah.
So healthcare, we don't need to build all these gigantic
without equipment.
Equipment. Why are we not looking at the primary healthcare center? I don't need to go to general hospital in a care house to treat myself if I'm staying in Ikeja when there's a primary healthcare close to me. Before now, I had most pregnant women to have their children in primary healthcare center. But now they will have to go to private hospitals. So once you begin to have money to improve upon those sides, then the consumer price index of the average Nigerian is improving, because it's not spending so much on what government has already taken care of.
All right.
Okay, I think we'll have to leave this conversation here this morning. Thank you so much, Muktar Mohammed, for finding time to be with us on the program. The CEO, Finance with Muktar, also a financial management consultant. Thank you for always finding time to be with us here on the program.
Thank you for having me.
All right, we'll take a quick break. When we return, the conversation continues with Adibimpe and Joy.